you always you always see us fluctuate between Fibonacci, the candlesticks, the market. So every point in time, we are doing we are doing one thing with Fibonacci.
Mm.
Yeah. So if you look at the market is full of ups and downs. And of
Yeah,
course,
lately. Yeah.
a lot of these ups and downs, they are actually support and resistances that you can, nicely locate. So for instance, let's look at this market here. This is GBP JPY, right? Now,
Mm.
if you look at this market here, let me bring out this chart. You will see that in the past, this place was a resistance, right?
Mm-hmm.
This place here was a resistance. And now the market came back to that
Yeah.
resistance level. You see that?
Mm.
So this is one way you trade uh, a structure in the market. Okay. So now
Mm.
the market has come back to this resistance level. When the market comes back to the resistance level, in order for you to take advantage of this place to trade, watch out for a bearish candle because this place is a resistance. If the market comes here, can you see the market came with a very strong bullish candle,
Yeah.
but this bullish candle did not break through. It did not violate this level. It
Mm.
did not break above the body of the candle, neither did it break above the wick of the candles. Okay. So even though this candlestick is very aggressive, it didn't successfully violate this level. And if you look at this candle body, you will
Mm.
see this wick just nicely create a rejection from this level. So with this rejection that this market has created from this level, all you need is a bearish candlestick, either pattern or formation or a strong indication that you have bearish movement coming from here.
Mm.
And an aggressive person will just sell this market at the close of this bearish candle. A conservative person will want to sell this market at the close below this last bullish candle.
Mm.
You see that?
Mm.
Below this last bullish candle here, the candlestick that closes below it can be your sell. Okay, and you jump into the trade. So there are many, and now, right now, this market is coming to another support level. Here is a support level.
So that means it's going to keep falling.
Here is a support level. Yeah, so like I said, if you look at this place, if you look at this up here, the market came back to this resistance level and then it gave you a bearish candlestick and the market sold. Now the market has come to this support. Let's look at this support level first. This is support level, right? The market has
Yeah.
come to this support level, but there is no bullish candle here. Can you see there's no green candle that
No.
says that the market is going to buy? So this is where most traders make mistake, right? They say, oh, this place is a support. Even though this place is a support, you need an indication that the market is going to buy from that support. And what is that indication? When the market gives you a bullish candlestick from that support level. Okay. The
Mm.
market is going to come to this one, it's going to come to this one, it's going to come to this one. It all depends. So there are different ways that you can trade the market. So one of the most important thing is first of all, understand the main concept, which is the A, B, C, D price swing. If you understand the main concept, now it is easy for you to apply. It is easy for you to imply. It is easy for you to say, okay, I want to trade a particular pattern. So this pattern that we are talking about here now is simply double top, right? So this is one top, and this is another top, and then the market. So okay. Now, ideally, this market will do two things. One, the market will the market with one come and break this low. So the lowest point before the market rally up the market can come and break this low and then pull back into this low, then it continues to sell. Or the market can come and break this low without even bothering to pull back, come all the way and break this low. Okay, when it breaks this low, pulls back into this low, then it will continue to sell. Okay, as a trader, you need to anticipate all these opportunities. You need to look at the market and be able to say, oh, the market will most likely do this or not. You just guess. Okay. Now, what verify or what consolidates your guess is when the market now show that, okay, this place is a support. Because this place is a support, the market gives you a bullish candlestick formation, then you have a buy trade in your hand. If the market goes to a resistance and gives you a bearish candlestick formation, you have a sell in your hand. Like this market that ran all the way to this top here. All you need to look at is here, this place is a support, right? This place here. You can take it all the way from the wick to the body of the candle, right here. And say, anything that comes into this area and gives me a bullish candlestick formation is a reversal. Okay. So an aggressive person will just buy the market from this candlestick, saying this is a bullish engulfing candle. Person can just buy. A conservative person will wait for the market to either one, break an aggressive downtrend line or break this trend line. Okay. The most appropriate to draw is this one. So this is a high, this is a high. So you connect two highs, and then the market comes and creates a low. Remember, this is a low, and create another low. And from this low, the market say buy. Okay. So as the market is buying here, if the market now come and create this high, you cannot connect this high again and wait for the break. The market comes again, break this high, you take another buy. So you can have first buy here after this break, second buy here after this break, and then these two will be in profit all the way to the top. Okay.
Mm.
All right. So today we are going to be talking about indicators. Okay.
Mm.
So let me just quickly take you back to. So trading with indicators. Okay.
Yes, sir.
Uh, Now indicators are simply uh, um, tools that help you to either identify the direction of the market, or they tell you where you can possibly enter and leave the market. And they do this by following the price. So what happens is your price is your candlestick, but the indicator is not candlestick. So the indicator work with like the average over a period of time. So um indicator can take, so when you take, for instance, moving average, and you say moving average 20, if that moving average 20 is applied to a daily chart, for instance, it means that you are looking at things that have happened in the last 20 days. Okay. So you are trying to foretell what will happen in the future using things that have happened in the last 20 days. If it's 50, you say last 50 days. If it's 100, say last 100 days. Okay, the higher the number, the the more effective the indicator is. But then the higher the number, the slower the indicator is. Okay. So there are a lot of calculations that are done, for those that are developing these indicators. They do a lot of mathematics, to come up with these indicators. But one thing I can tell you is that, you see, almost every indicator you will see in the forex markets, they are good. Okay. Some people will say indicators are not good, indicators are lagging. That's not true. Indicators are of different types. We can categorize them into two broad groups, and the two groups are those that are lagging and those that are leading. So if you say, if an indicator that is lagging, what it does is that it tells you uh, uh, where price has been in the past. Okay, that's what it does. It tells you what price has done in the past. But then a leading indicator will tell you what price is going to do in the future. Okay, so that's what it is. So is a technical indicator is a mathematical calculation that can be applied to a currency past pattern like price, volume, or even another indicator. So indicators do not analyze any part of fundamentals like announcement, species, and earnings. Indicators are used mostly by traders, as most long-term investors don't find them as what valuable. Now, you use them as confirmation tool. One of the best way to use them is to use them as confirmation tool, or to spot continuation opportunities in the market. Okay. A lot of people are disappointed by indicators because they solely rely on indicator to do the magic for them. But like I said, the indicator will not do the magic for you. If you don't understand price action, you'll find it difficult to use indicator. Okay, so first you need to understand price action, which is what we are doing, talking about the A, B, C, and D's, right? So you need to understand what price action is all about. How do I trade this market without, using any indicator? Okay, without
Mm.
using any indicator, that's price action. But then now you now need indicator as a tool that will help you in confirming that analysis you've done using price action. Okay. So indicators are used to alert traders about a trend. They are used to predict the direction of the future price. They are used to confirm technical analysis, suggested by other indicators. So they can be classified into lagging, leading, and confirming. Okay. This one new layer, confirming. So it's either they are lagging, or they are leading, or they are helping you to confirm whether that your analysis is correct or not. Lagging indicators are those that follow price action. That is, they give a signal after the trend or reversal has started. So they are slow. When you say lagging, it means they are slow. And of course, that's what it means.
Mm.
Actually, like I said, you are looking at data of the past 20 days, past 50 days, past 100 days to 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 make a projected to suggest a projection in the market.
Mm.
Okay, so it tends to rely on past information, and of course, you know that past information in the market is not indicative of future performance. It doesn't tell you that. because you did it well the last time, that you will do it well the next time. It's not, there's no such guarantee. Okay. The only thing
Yeah.
is, once you consistently and continuously use this indicator, you get to that level of mastery, okay, where you now understand the indicator. The indicator is now part of you. You can do, in fact, you can do anything you want to do with the indicator, and you will be right. Okay. So it's all about learning, it's all about practice, it's all about um um it takes a lot, right? So I can tell you, for a person like me, it took me a lot of time. For instance, if you look at my, let me show you something in my computer. So if you come here now, if I click on this, these are templates, different templates. Now, these templates, there are a whole lot of templates. And for instance, I've done template for monthly chart, weekly chart, daily chart, 4-hour chart, 30-minute chart, 1-minute chart. I have template for all of them. Okay. Now, it takes time to develop this template. You develop it, you save it, and you can imagine that this is what I'm using now. Okay, before now, I have so much that I got to a point and I said, "Oh, I don't need all this," and I have to throw them away. Okay, and at some point again, I have to do another set again. So it's a continuous thing. You just find yourself, once you start trading and you have really, really fall in love with trading, you just find yourself trying to do new things all the time. You try to want to make something, something looks even better. You try to increase the precision of your analysis. You try to make sure that your analysis is top notch. Okay. So you keep
Mm.
changing, you keep changing. But now in all that changing, you need to be able to say, okay, this strategy is like for instance, for myself now, I've been able to narrow this. So this is 4 hours, right? This is a 4-hour chart. So I can come here and say, put my 4-hour trading system. So I come here and I put 4-hour H4. So I look for H4, H4. These are H4. So I want to apply 4-hour trading system. So maybe I apply this one. Okay. Now I'm looking at a 4-hour chart, and the signals I'm getting are going to be based on 4-hour chart. Now, this same chart, if you flip it to 1 hour, it will show you something completely different. Okay. But even though that thing is completely different, it doesn't change the sentiment of the market. Okay. It doesn't change the sentiment of the market. So if the market is going up, this indicator will tell you, yes, the market is going up. So if we decide to scroll back now, let's say if we scroll back, you will see places that the market has trended in the past. Okay, and you see places that the market has ranged in the past. Okay, let's let's switch it to something like GBP USD. Yeah. Okay, so 4 hour. So we just come look for 4 hour here, and then say apply. So you can see that this market is in an uptrend. Okay, by merely looking at the market like this. You see that this market is in an uptrend. Now the system should be able to tell you that the market is in an uptrend. Okay. So I have several components in this system. Everything here is indicators. Yeah, moving average telling me market is buying, right? And then I come to these two. You see these two showing me that the weekly trend is up, daily trend is up, 4-hour trend is up, and 1 hour trend is up. Say look to buy. So it's telling me that hey, the best trade to take right now is a buy. Okay. And then if you come to this window, you see when this market flip to the green side, means that the market is buying. And when it flip to the red, means that the market is selling. Okay. So all you need to do is be able to identify this beginning. Okay, be able to identify this beginning where this market flip up and then start to buy. Okay. So once the market flip up and is buying, irrespective of what the market is doing, whether it's giving you blue candle, green candle, black candle, well, it doesn't matter. This volume has said that the market is buying. Okay. I don't know if you get my point. So now, this next indicator you are seeing here, this is stochastic, stochastic, stochastic. Okay, but each of them has different values. Okay, just 1 minute. All right. So now this indicator, this system, I built it myself, right? So I'm able to determine the condition to buy, the condition to sell. Okay, so you'll be able to create a, okay, let's
So
see.
what's this thing that you usually use that makes it look like this?
Which one?
These all colored, green, yellow.
Okay, so it's an indicator, but it's not a free indicator. Okay, so if you go to, so let me show you the website of the people that owns the indicator. Uh, this is their website, True TL. So this is their website. So if you pay for the indicator, I will come here and say buy. Okay, you pay. Okay, this is what you want to do. You want to buy it for 30 days. You can rent it for 30 days. You can buy it for 365 days, which is 1 year. And then you can also buy it for lifetime. Okay, you can buy it for
So what
365
indicator is
days.
that?
The name is called True TL. Look at the name, True TL. It means true trend line. That's the meaning.
Hmm.
Okay. So now
Okay.
this is the indicator. Let me show you how it works here. So this is the indicator. These are the indicator. This part of the indicator. So it's a combo. Let me put it that way. So if I click here now and say True TL, just type True TL. From this place, look at it from this place, True TL. Can you see that everything here is True TL, True TL, True TL, True TL, all the way to this point? Okay, they are
Hmm.
all True TL. Okay, this is one. You pay for it once, like that. I pay $160 and it's for lifetime. So every 2 year can be used. This one is for trend line. You just come drop it on your chart and say, okay, it draws all the trend line for you that you want to see. Okay. This
Hmm.
one,
This is different from the one you talked about the last time, though.
no, it's the same indicator. It's the same indicator, but I just showed you only the trend line the other day. Okay, so you can use trend line, you can use moving average. So you come here, true TLMA. True TLMA means true TL moving average. Okay, so this
Hmm.
trend line that you are seeing, you can actually change the time frame. You can come here and say, I want this, even though I'm on 4 hour, I want to see the trend line of daily chart. So I say apply. So the trend line that you are seeing now is that of daily chart, not the one of 4 hour. Okay. You can
Mm.
come and say, I want to see the trend line of 1 week. I say apply. Okay. You see weekly trend line on it. And you can see that the market break a major trend line. So if you look at the trend line, when you put the mass on top of the trend line, it shows you a number. Okay. You see through TL up, U means up. If I come here now, I put it here, you will see through TLD, D means down. So it means that this is a downtrend line and this is an uptrend line.
Mm.
Okay.
Yeah.
So you can come here and say through TLMA. Just come here, drag and drop and say, okay. So you see it has drawn the moving average there. So this moving average now, I can come here, I can adjust it. I can come here and say, uh, I want this to be 50. I say 50. Okay. I want this to be simple. Okay. So you can change it to be 50. You can change this color to be white. You can change this one to be white. You can change the thickness to be 5. And then you say apply. Okay. You see it has changed. So all these things that you are seeing, all this plenty, whatever you are seeing on my chart, they are actually moving averages that I have adjusted. I personally adjusted them, with figures and values that I think, are okay. Okay. All right. So let's let's just quickly go back to where we're coming from. Let's see. See. I have trade here that is running massively in my favor. Very good. Can see this trade, it has just pumped up in my favor. That would be almost $200. Yeah, beautiful. So you see this 67, 67, 66. Okay, so I want to take that profit. I want to take that profit. I don't want it to pull back against me. I guess rather take profit, take profit, take profit, and allow BTC to be running. Okay. All right. So what I just closed now is 66 times 3. So that's how much? Let's see. 66 times 3. That's $198 times 1,600. 316K. So that's what I just made now by closing that trade. Okay. So let's continue what we're doing. So the most common of all the indicator is usually the lagging indicator, and of course, is the moving average. Okay. Now, a lot of people don't like moving average. A lot of people take advantage of moving average. And I can tell you, that you should like moving average. It's very simple. I will prove it to you that you should like moving average. Look at your chart. Okay, this is your chart, right? This is your chart. Now, this your chart can also be a line chart, right? Line chart. Now, if I see, I can make the candlestick bar. I can make it candlestick. I can make it line. This same candlestick is the same thing with this line. Do you agree with me? This candlestick like this, I was saying like this, is the same thing as this bars and is the same thing as this line. Then now, watch this. If I apply moving average 1, okay, moving average, this is moving average. Moving average 1. Let me, please watch it very well. Let me make it bold, make it big. Moving average 1. And I say, okay. Can you see that it's exactly the same thing with your price, with your candlestick? Do you see that? Hello? Can you hear me answer? Let me see. Answer, are you there?
So sorry, I went to use the low.
Okay.
Yeah.
So let me repeat what I was saying. I said, this your bar chart here. Okay. Let me take away the moving average. Take away the moving average. This your bar chart here is the same thing as this candlestick, right? And it's the same thing as this line chart. So it's either you want to display your chart in line format, or you want to display it in candlestick format, or you want to display it in bar chart format, right? Now I'm not telling you, I said this your line in order for you to know the efficacy of moving average. I say if you apply moving average one to your chart, it will 100% mimic your prices exactly the same way it is. Look at it. This is moving average 1. So what does that tell you in effect? It means that price is moving average 1. It means that your candlestick is moving average 1. Can you see that? I don't know if it makes sense to you.
It does. It does.
So if price is moving average 1, hmm, moving average 1 is price. I can take away this moving average, okay, and apply through TLMA, which is also moving, it's still moving average, right? Moving average. But now I have the option of choosing the time frame. So I say, okay, I want to see 4 hour, the price of 4 hour. I want to see it on, okay, let me say, I want to see price of 1 day on 4 hour. And I say moving average 1, exponential. Change this to good. Change this to good. And then I say, okay. So this gold line is moving average one of daily, okay, applied to 4 hour. Okay. So this is so basically from when I discover that price and moving average are the same, it makes me to believe moving average more. It makes me to have more confidence in moving average. Okay, so if we strip it back now, this is our candlestick. All right. So it's straightforward.
Yes, sir.
It's pretty straightforward. So your moving average, they are very essential. So almost all the indicators you will see in this world, they are moving average based. Almost all of them. They are all moving average based. Even the oscillators, they still run on moving average. The only thing that differentiates them is just okay. All right. So for leading indicator, these are indicators that tells you ahead of time that this is where the market want to go. They try to predict price by using a shorter period, in their calculation. So some popular leading indicators are oscillators, which are stochastic divergence, RSI, name it. Okay, these are some of the popular leading indicators. Uh, okay. So leading indicators are mainly used for entry and exit signals in combination with the filtering logics of the lagging indicator, sometimes moving average. Okay, let's see. All right, so let's see. So we have trend indicator, momentum indicator, volatility indicators, volume indicators. Okay. I don't want to go into all this definition. Let's just skip. Okay, so let's see. Okay, so here is what you need to do when you're trying to build a strategy using indicators. So you say strategy is a set of objectives, absolute rules defining when a trader will take an action. So strategy needs to have three things. One, direction, two, entry, and three, exit. So any indicator that you are using, you should be able to get, you should be able to come up with the fact that you can identify direction with that indicator or strategy. You'll be able to identify when you should enter the market from the strategy, and also you should be able to enter when you leave the market. And now with Fibonacci, we've made entry and exit easy, right? With Fibonacci, we know that we want to enter the market from the retracement level and we want to leave the market as the extension level. Okay.
So the RSI does not really work.
No, it works. It works. RSI is an oscillator. So RSI will tell you the market is going up. Okay. It will tell you ahead of time that the market is going to go up or down. Okay.
Yes, sir.
All right. Can you hear me?
So I can hear you.
Okay. So the RSI and the stochastic, they are they are oscillators, right? That is, when you see something is an oscillator, it means that the thing fluctuates between two values, and these two values could be high and low. Okay, so the values could be up and down. Okay, so what the RSI and the stochastic does is that they tend to tell you where the market. Okay, so they tend to tell you when the market is either overbought or oversold. Okay, okay. So when the market is moving, so for your stochastic, it's usually more effective in a ranging market. Okay, but in a trending market, it's not as effective. Uh, uh, it's not as effective when the market is trending because the market can remain overbought for a long time. The market can remain oversold for a long time. In that way, if you are looking at it on the trending market, oh, you will make a mistake. Okay, because sometimes when it gives you signal that the market is going to sell in a trend that is uptrend, it is better for you to use the approach of trading only the oversold period. So when you notice the market is oversold, okay, so sell zone and the buy zone are the zone where the market is either oversold or overbought. And now if the market is oversold, you are going to be having uh okay, let me just okay, so this is one of the ways you use the stochastic. Okay, you look for the high or you look for the low. So you see each of these counter trend line, this counter trend line, they 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 kind of align with a stochastic level, you know. So what happens here is when you draw counter trend line like this, look at your indicator. Is it coming from the oversold region? Yes. Let's see back. Okay. Okay, so if you see all this trend line, counter trend line, counter trend line, counter trend line, you see there's a corresponding low. Let me do this one. Okay, so this is the one, two, three. Let me see. Yeah, just give me 1 minute. Let me take some water. Coming. Okay, are you there?
Yes, sir.
All right. So, like I was saying, so this indicator, you need to kind of be used to them. Okay. Once you are used to them, you now try to say, okay, this indicator behave XYZ way Before now, let's see if it's going to do the same. So this is a strategy we call 1, 2, 3 strategy. Okay, it's part of what we'll do maybe in the next class. Is a strategy whereby you combine indicator, which is stochastic in this case. Okay, you may use another indicator, fine, but stochastic is better. So when the stochastic is in the oversold region, you draw an aggressive counter trend line. Okay. Now what you want to see is the market breaking this counter trend line, forming a candlestick formation, and then you see that the stochastic is moving from the 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 sell zone, okay, the buy zone, so rather, sorry, the buy zone. The stochastic is moving out of the buy zone. Then you now place your trade. So the first condition is one, the market breaks a counter trend line. Two, the market form a candlestick formation. Like in this case, you can say this whole setup like this is a morning star. Okay. And then three, the stochastic is leaving the buy zone. Okay. This action alone is what is responsible for all this movement to the upside. Okay. All this movement to the upside. That's what is responsible for it. And you can do it over and over again. Okay. So if you look at this my strategy where let me apply it again here. H4. Look at this my strategy. You see that you see that this is stochastic, this is stochastic, this is stochastic. Okay, the only difference between this stochastic, and this is the long-term trend value that I'm using. Okay. So this one I use a higher value, followed by this one a higher value, and this one a lesser value. Okay. So if you look at this strategy, I can say every time the market come into this oversold region, in any of the stochastic, like in this case, you see here it came to oversold, here it came to oversold, here didn't really enter the oversold very well. But of course, you have two indicators that already confirm it. And then you can see this guy flipping from red to green. Okay. Okay. So this strategy is mine, and I've built a trading approach around it. So it's helped to reduce the time I will spend on the analysis, right? So once I come, what do I need to analyze? Did the market enter oversold region for these two? It doesn't enter, and of course the third one did not enter. Then, sorry, with this one in oversold, this is oversold, and this one is not oversold, because these two are oversold tend to give you a higher chance, okay, of Okay, so you need to take it upon yourself that, hey, I'm going to build a strategy. And like I said, in this case, these are just collection of moving averages. Okay, I'm the one that do the color, so don't bother about the color. Don't get carried away. I can decide to do it. Everything will be one color. Okay, let me see. Let's see the same 1, 2, 3. One, market break a counter trend line. Two, market form a candlestick formation. Three, okay, you see how the thing fall. So condition one, break trend line. Condition two, candlestick formation. Condition three, market is exiting the buy zone, sorry, the sell zone. And then you see how the market fall. So I just don't need this one. Okay, so we'll just quickly look at this. So still on trading with indicators. Okay, so in this section, we're going to just look at some indicators. I'll just be a little bit fast on this one. So let's come here. So talk about momentum, oscillator, or indicator. So this is one very popular indicator because it tells you about uh which side is the market headed. Okay, where is the market? Okay. So you know the way the momentum work. The momentum work in such a way that, let me just quickly go there. Just fast. Okay. All right. Yeah. So it work in such a way that if the momentum line is above this 100 line, the market will be buying. If this momentum line is below this 100 line, the market will be selling. Is it clear? Okay. So one is to know how individual indicators they operate. The next one is to know how you can combine more than one indicator. So in this case, momentum, because this momentum line is above this 100 level, the market will continue to buy until such a day that the market break below it.
So why is the beginning not down like the way the thing was down on this up chart?
You mean the beginning of You mean from here or from
Yeah,
here?
this side, yeah. You
This
can
this upper part.
no, this the beginning from the left side.
Okay, so you're not seeing everything.
Okay.
Is the extent that you can see that is screenshot and put here. Okay, so the market is already buying. So this is gold. You can see gold was a very long buy. Okay, and then you can see momentum, on top of the line. It doesn't matter the shape. The most important thing is that it's on top of it. Once it's on top of it, keep looking for support to buy. You look for support to buy. Okay, and then if it's below it, okay, then we have the MACD. Okay, and I said for the MACD, once the histogram is showing above zero. Okay, so if you look at this stochastic with the histogram on top of the zero, the market is buying. And when the histogram comes below the zero, the market will be selling.
When it's below the zero,
Yes,
the market will be selling.
correct. And when it's above zero, the market is buying. Okay, so now we established that histogram is on top of zero, meaning market is buying. We established that this same market on momentum is buying, and then we come and combine, you know, all this indicator together. Okay, so we have moving average that, of course, unit value is simple. Above moving average is a buy, below moving average is a sell. So we already have an idea of this one. Okay, so okay, I mean, I just want to see you add. We combine the three. So this is what I'm looking for. So you have moving average telling you that the market is on top of moving average and the market is buying. So when you now have moving average telling you that the market is buying, MACD telling you market is buying, and then so when you have situation like this, moving average say market is buying, histogram say market is buying, and you come to momentum, market is above the momentum level. You need to quickly look for an opportunity to buy. Yes. So if you look at this market here, look at this market here, this set of candlestick, and see that this has already confirmed that the market is going down. And of course, moving average confirmed that. Okay. So, but I mean, looking at this, is this something you can look at and say, let me go and try my own on this. You may just want to see that you have this like this one now. This one.
Mm.
Okay. So, parabolic SAR. So all these indicators that you are seeing here, they are all in your MetaTrader. All right. Okay. I think we need to let me just see. So you really need to be able to put on something like this. You need to come up with something like this, like you say, this is my trading strategy. And then because most time, if even if I analyze the chart and I want to do a confirmation, I'll just come and put this my system on it.
Mm.
It will tell me what is happening. At a glance, it will just tell me what is happening. So this is ADS, the average directional index. This one, the way this one work is like this. So it has a value, and that value is usually 25. Okay. Once this line, which is this line now, once this line is above, see the ADS midline. Once this ADS line is above the midpoint, okay, it's a condition for market to sell. But then for the market to a condition for market to either buy or sell. But now if the market there's what we call plus DI minus DI, which are these two lines, this green one and this red one. Now, if this ADS line is above 25
Mm.
and this minus DI is above plus DI, that is the red above the green, the market will sell. Okay, the market will sell. So once you understand all this, you can really combine indicators. But there are a whole lot of indicators, and I'm going to show you some of them, in probably our next class. And I will show you how to download them. There are plenty sites where you can get indicators from. Okay, so many. I've downloaded so many. Like for instance, if I let me see if I'll see that fact quickly. Uh, 1, 2, 3. Okay, so for instance, this is trading systems. Okay, these are trading systems. Okay, so like this is indicators. Okay, so if you look here, all these things you are seeing, they are all indicators. Everything here, they're indicators. It's a lot. Okay, see this one, it's an indicator. So if I just carry this thing now like this is the system. This is the template. Okay, if I just carry this thing like this now and drop on my MetaTrader 4, it will automatically give me the system that is associated with all these indicators. Everything here has been used to create a system. Okay, like I told you, I have so much. It was me, it was on my own. I got to a point and I said, hey, these indicators are too much. I don't need this much to make money in the market. Okay. But I mean, just for the knowledge sake, it is good for you to know them. You know a lot of them and know how to apply them. Okay.
Mm.
So look at this one now. Look at this. See your average directional index line is higher than this your 25 level. And then you see this your plus DI, which is the green, is higher than the minus DI, which is the red. So the market will buy. So you are going to see the market buying. It doesn't matter whether they are coming down, in as much as this line is above this 25 line and this DI is above this one, the market is going to be buying. Okay. Bollinger Band, Sun is popular. Stochastic. Stochastic, like I said, is more effective in a ranging market. Okay. Because the market could remain overbought for a very long time. But if you look at, for instance, now, look at this place. Look at this place, for instance, here. You see the market is trying to tell you the market is going to sell, but the market is overbought. Now look at the effect on this chart. You see that the market is just buying. Okay, you just keep buying, keep buying, keep buying. Even when this guy tells you market is going to sell, like, yeah, the market came down, telling you market is going to sell. If you take this trade, you'll be losing because the market is not going to sell. The market continues to buy. Why? Because the market is overbought and stochastic is not an effective indicator when when the market is trending. So because of that, you need to look for something else that will help you to identify the trend, and that's your moving average. Okay, so it's better to stick with your moving average than to I like this market. Look at this buy that this market is buying. Number one, the market created an armor here. Can you see this? Can you see this armor here? And then the market came and created a morning star. Look at this candle, this bearish candle, bullish candle. It's a perfect morning star. The market bought and bought and bought and bought and came here and created this powerful continuation. How would I put it? Is it gravestone doji now? Gravestone, that's a bullish gravestone doji. You see the way the next candle, it did not even attempt to do weak to the downside. See the powerful move, like move up, powerful move. That's how effective your candlestick can be sometimes. You know, okay. Any question so far?
I got a bit lost in this what's it called? The last the last three indicators. I'll have to go and rewatch the video.
Okay.
Mm.
Well, no
But
problem. We can always look at it.
whatever
But
I
don't worry,
see.
maybe the next class, because I don't intend to take this class for long because I'm actually really,
If my
really
head self is not too okay.
yeah. So what we will do, we will do something like this. I'm going to show you one by one here.
Mm.
Okay. I'm going to show you one by one here the way they work, all of them. Okay, so
Okay.
you come here and come to your indicators. So these are your indicators. So we
Yeah,
start
that's
from here.
very fun.
This is the ADS. So if you double click on this and apply, okay, this
Mm.
is your ADS. This is the one that I'm talking about now that has the plus DI and the
Mm.
minus DI. Okay. So if you zoom it up like this, and then you bring out your chart. So this is come to this level here and say add, and then you put 25. Okay. And then I say maybe I want to make it tick this 25. Okay. So this is my ADS line. This is my ADS line. Okay. Come make it tick. Okay. 14. Fine. Then this color, this plus DI minus DI, you can decide to make this one uh blue, or okay, let's say navy blue and maroon. I prefer navy blue and maroon. And then you can come here and then this. And then you say, okay, this whole thing will change. Look at it.
Yeah.
Okay. So this is my ADS line that is above 25. And then see my plus DI is the blue, my minus DI is the red. In as much as this ADS line is above this 25, and this my plus DI is above this minus DI, this market will be buying. But when ADS is below, when ADS is below, uh, let's look for a place where the market sold. Okay, so that I can use it as an example. Okay, look at this set. ADS is above 25, right? It is above 25. And then C of minus DI, C of plus minus DI. Minus DI is above. So let's even look at the crossing of minus DI and plus DI. You can, because that's another way to also trade it. You can come here and say, okay, where did minus DI and plus DI cross each other? Okay, where did they cross? Look at their crossing. From this crossing, where this red cross to the up, okay, watch out for a sell that the market is going to start selling. But then this your ADS line need to be above this 25 level.
Mm.
Okay. So you see how this minus DI crosses to the top. So even if I decide to remove this ADS line, I can even do something. Another way you can also use it. You can come here and say, remove this ADS line, right? You can come here and say, remove this ADS line and say none. And then say, okay. So now the only two lines you're seeing is the plus DI and the minus DI. Okay. And then you now say, uh, you want to trade the crosses. If minus DI crosses above plus DI, this one you can even remove the mid level, because the mid level is not going to do, it's not going to be doing any work for you. Okay. So you can come here and say level, just delete and say okay. So now I have only plus DI and minus DI on my chart. So every time uh minus DI crosses to the top, the market will be selling. Every time plus DI crosses to the top, the market will be buying. Okay. So if we now decide to look, let's take history. Let's look at some history. Watch this. We say plus DI crosses to the top. Can you see how well the market bought? Look at it. See how well the market bought, for a long time. Look at this one too. Plus DI crosses to the top. Yeah. Sorry, yeah. Now you can see that it's not all of them that will be 100%. Look at this one. This one is so fantastic. Look at it. Process, and then look at this buy. Crazy. Look at this sell. Look at it. Plus the eye process. You see that? So you can do it back and forth, back and forth, back and forth. And you can use it for your trading. No doubt. You can use it for your trading. Okay.
Mm.
So basically what we'll do, we need to do them one by one like this. Okay, I
Yeah.
think it will be clearer.
Mm.
Commodity channel index, this one is another very good indicator where the market come from minus 100 to plus 100 and from plus 100 to minus 100. Okay. I think we should call it a day, eh?
Yeah.
Uh,
It's been a very long day.
yes,
Mm.
that has been very long for me.
Mm.
Okay.
Okay.
Have a wonderful night rest.
Okay.
I'll let you know the date for the next class. All right.
Mm. Mm.
Bye.